Hello, my name is Mandy Harless with Harless Home Connection and ERA Real Solutions Realty. I'm here with Noah Brader with Concord Mortgage, a lender partner of ours that I've worked with for many years. And we're coming to you to talk about some topics that we are hearing from clients that we're meeting every day. So we want to talk a little bit about what major changes are coming in the mortgage industry, things that the general consumer might want to know or be aware of. Noah, what would one of those examples be?
I think technology is a big one right now. So our online application, when someone goes to apply, they could be sitting at home in their pajamas, watching Netflix, and apply for a mortgage, and actually get all of their documents, if we need documentation, get the documents in using the online app. And sometimes they don't even have to go get that stuff. They can import their tax returns, import their bank statements. It's very safe and secure, all from the online application. So that's something within the last year that's been rolled out that's really exciting. And
that's fantastic. I remember it being a really cumbersome process, and
yes,
you had to go and track down a bunch of documents, and that could be pretty intimidating. So the ease of application, I think, is a real significant improvement in the mortgage industry. How about something else?
So another thing, this is very recent, within the last month. If someone applies and we can verify their income from a third party, and I'll be able to let the person know. So if they apply online, I'll get back to them the same day. And if their income is verified, they do not have to sometimes give us any documentation. So no pay stubs, W-2s, tax returns. That takes the burden off of the consumer and makes it very easy to go through the mortgage process, which is way different than it was years ago.
Absolutely. Well, that would be a huge improvement. So I'm anxious to hear how that gets implemented and becomes everyday practice for us.
Sure.
Talk about wiring fraud. I mean, obviously some of the changes that happened behind our recession, and one of the requirements that came out of CFPB was a requirement to wire funds for closing. So what changes or what's happening on that front that we might want to know about?
Yeah, so in 2016, there was a change that was made in April, and anybody that was bringing more than $1,000 had to wire the funds. It's now changed to, if it's more than $10,000, you have to wire the funds. So if you're buying a house, you have to be on guard with wire fraud. We constantly get emails that say wire money here, and if you're buying a house, you may think that's for the purchase of your house. So you really need to check with your real estate agent, your lender, and the title company. Pick up the phone, call them, and make sure this is legitimate and that you're wiring it to the appropriate place, or some tragic things could happen with your money.
Yeah, I think the biggest thing, what we're telling clients and we want people to understand, is we're never going to email you instructions on wiring money for closing. It's a lot of money, there's a major risk, and we're all vulnerable when it comes to electronic communication. So from this situation, we're just saying never just take an email as an instruction to wire money. You need to call the parties involved in your transaction and make sure it's legitimate. Because once you wire those funds, if they're wired to somebody not involved in the transaction and it's a criminal action, the chances of you ever recovering that money are very slim to none. So we just can't say enough about being very cautious when it comes to wiring funds in the transaction.
That's right.
And talk to us about some of the expanded guidelines. I mean, of course, we went through a recession, we went through a foreclosure epidemic that was unlike anything the mortgage and real estate industry had seen. And we're recovering, but during the course of that foreclosure process and that epidemic, there were a lot of restrictions put in place, and I think a lot of them made a lot of good common sense and were stopgaps or protection for everyone. But now we're starting to reevaluate some of those, and so some of those things are adjusting. Is that true?
Yes, it is true. There's a lot of programs that have adjusted their guidelines, and I don't want to get too technical with this, but basically they've kind of expanded the guidelines to get approved. So as a lender, it's becoming easier to get someone approved. Maybe they can get approved for a little bit more than they were able to last year. So just in general, the guidelines have expanded. The credit scores have expanded a little bit. Your monthly debt versus your monthly income has expanded a little bit. So it's been good for a lot of people. And maybe sometimes with those price points, it allowed them to go up $50,000 and open up their search, and maybe they were able to find the house that they really wanted in the school district that they wanted and all those good things.
Sure. And I think those adjustments make sense in a lot of cases. It still requires good common sense and being really careful in your financial decisions. For us, from a real estate standpoint, we want people to buy homes, but we want people to keep homes. And having experience working with lots of people during the foreclosure epidemic that couldn't sustain their home and had to sell or lost them to foreclosure, I never want to see anybody be in that position again. So good common sense mortgage decisions is what we support and what we root for. So it's wonderful to hear that some changes for the positive for the consumer are happening again in the mortgage industry.